All right, welcome back, everyone. It's been a little bit over a month since I shared my video on the Triad model, and so far the feedback has been very positive. I even had two people reach out to me saying that they got funded using the Triad model, which is great. I love to hear, which tells me that I guess I did a pretty good job at explaining the foundational concept, and then those people did their homework, did their work, and back tested, forward tested, and they were able to see those setups happen in real time, and it got them funded. Which is as I always say, that getting funded by itself doesn't mean that much, but it's definitely a step in the right direction. What matters is keeping the accounts, getting those payouts, right? Taking it nice and easy without over leveraging, getting paid. That's all that matters. But it's always nice to see when people say that, my work helped them get funded, see the market better, form their own models. It's always great. Anyways, in this video, I wanted to discuss the Triad model a little bit deeper. We'll go into how I personally use range expansions for this model. And at the same time, I'm going to go over the trades that I've shared publicly in the last week and a half or so in my Telegram group. Again, since I started the Telegram channel, I was always doing pretty much the same thing. I usually give my bias. I say I'm bullish, I'm bearish, or I want this high, I want this low, something to that effect. And then afterwards, I share the trades that I've taken, wins, losses, it's all there. But so far, January has been absolutely fantastic. And I don't want to spoon feed people at the same time completely. I'll never say, stop loss, take profit. You'll never hear that from me. But mostly, if you pay attention, you know that if I call something out and if I'm right, usually those trades happen in half an hour or less, maybe in 1 hour maximum. Again, I scalp, so I don't need I'm not interested in any long-term trades, long-term biases. I see something, I call it out usually, and it's witnessed by hundreds of people. They see if I'm right or wrong. Anyways, so let's look at the trades and explain. I mean, to me, I think that's a good way for people to learn. It means that also it shows that me, as someone who shared this model, is actually utilizing this model in his day-to-day trades. And that's the whole idea, that people can learn, implement it, and see if they like it, and maybe find some kind of rule-based system around what I share and create their own model. Anyways, so let's look at this. This was January 12th. I said I was looking at NQ and I wanted this, and when price was around here, I said I want this high and this high, and clearly you can see price did take out this high, but failed to get to this level here, which is still the win in my books. This was enough for me to get my like 30 something handles and then get out. So again, time and price, this setup happened right at 11 o'clock. You can see that NQ dropped to the low of its own AM range, 5 to 6 AM, right? And again, if you haven't seen the first video, obviously this is only going to confuse you. Please watch the first one to understand what's happening here, all right? Anyway, and you can see that at the same time, ES, even just by looking at these two indices, dropped beyond its range. And you can see that as was an imbalance, a volume imbalance. That's all nice and sweet, of course. But what I personally look for in this model is range expansions using the bodies, the highest up close body, the lowest down close body, not the full range high and low, only the bodies. I always use the range expansions on the bodies. Okay, so if we pull a fib out and we do an expansion, look, at the same time, ES went right to around with its bodies. Yes, we have a wick, but the bodies close very, very close to one range expansion. So to me, those are the things I'm looking for. If one market fails to break its range, but the other one breaks the range and stops, not at some random level, like eventually you have to understand that if you put like every quarter, a line every quarter, 25%. Of course, the market eventually is going to bounce off one of those levels. But I'm specifically looking for levels of 0.5, 1, and then whole numbers. So 2, 3, I don't want to have 3 years, 3 and 4. If it goes beyond 4 range expansions, then there was a huge price run. I'm usually not interested. Then the train is gone, the ship has sailed. I didn't take the trade. I missed out on it, whatever. Like, I'm usually not interested into taking any trades until we get into the next session, or maybe even in the next day. Anyway, so up to 4 range expansions, I potentially look for trades. I look for bounces again at 0.5, only the first 50% expansion, and then the 1, 2, 3, and 4. Okay, so in this case, again, this was enough for me to use an extra confluence that not only price did drop below this low here into this imbalance, inside this volume imbalance, but most importantly, if you want to use the Triad model, it stopped with its bodies very close to 1 range expansions, right? So what does it indicate? It indicates that the NQ in this case is stronger, right? It failed to breach its range. It stopped right at the low portion of it, so it's stronger. So I'm interested in taking a long on NQ, which I did share. That's why I shared. I said I want to see this high, okay? And this was enough to form a trade. I saw it a little bit late, like literally just like 5 minutes got late to, late, but still I was able to take a trade somewhere around this level here. I think my stop was here, so above this high was enough for me to. It was a little bit less than 2R, which was plenty for me. Like I got, I think it was like even 30, somewhere here maybe. So I got like 30, maybe 40 handles. Let's see. I have my again, everything is on Telegram. The link is under the video. I have it open on my other screen. I'm not bringing this here. Like maybe 30, 35 handles, something like that I got out of it. And yeah, that was enough for me. And what was I about to say? Sorry, I feel a little bit foggy today. All right, point is, yes, range expansion. It stopped at a level of 1. That was important to me to, as an extra confluence to take a long and on Q because it was clearly stronger. And you can see that the idea is being supported that eventually we just went sideways for the rest of the day, right? We never broke this high, we never broke this low, so we just went sideways, down, up, down, consolidated. But you can see at the same time while NQ did take out this high at 1030, ES high at 1030, also 1030 here, it was never taken out with this move. Eventually got it taken out here, but specifically at this point in time, it was weaker, right? It was weaker. It failed to break this high here. So that's why you usually want to take the strongest index. Again, this was all, this trade was, this bias was shared before the fact. And you can see that also, interestingly, by the end of the day, again, time and price, right around 3:30 p.m., there was a nice bounce right in the middle of the range, both ES and NQ here. I didn't, and the last few minutes of before 4 p.m., that's basically the market on close macro ICT talks about, but I don't think I took this trade. But the fact that, again, it was here at the same time, YM was broke its range on the upside, kind of retested this, had a little reaction here. Anyway, so that's that. And we'll go into later into an example where actually one index goes to, let's say, -2 range expansions, and the other one goes into -4. And when both of them hit round numbers, whole numbers, that's what I'm looking for also. And the one that doesn't go all the way to the furthest deviations is obviously, weaker or stronger. And you take that one. So we'll look into that later. Let me see, what was that? Then we'll go to January 16th. So then Monday was a holiday in the United States. This was Tuesday. So again, trying to kill two birds with one stone here. I kind of explain a little bit more in depth why I took those trades for the people who saw me calling those things out on my Telegram, and also show you the standard deviation range expansion approach. I think ICT started mentioning those things as standard deviations, which is right, which it's really not a standard deviation. It's a statistical concept that has nothing to do with it. I mean, range expansion is the more correct term. So everyone started using standard deviations. I try not to use that term. Anyways, just semantics, doesn't matter. Potato, potato, I guess. As long as you can, I mean, doesn't matter. As long as you can press the button and make some money, that's all that matters, right? Or lose some money. Anyway, um, January 16, what was it? Hold on. Okay, PM session. Yep, that was a nice setup here. So if you look at this was a PM session. I at right somewhere here. I also said I'm looking for loans on here on ES. I wanted to turn. I wanted these equal highs here. And you can see the market came very close to it failed to just very close to the target, which was still a win in my books because it was a profitable trade. We did have this imbalance here, if here, right here. Market dropped into it. But most importantly, again, it basically rejected the low of this range, while NQ was bouncing on the 50% of its PM range. And technically, to be correct, you would NQ was stronger, right? NQ was stronger here, and obviously you want to take this one because it's stronger. I took ES because I think I was trading theirs before. So anyway, if you want to play it very safe, you want to take always the one that's weaker or stronger. But you've seen me again publicly. Sometimes I kind of deviate from the rule because for whatever reasons I was trading maybe yesterday, I wanted to keep it on ES, or just I liked in this case, I really liked these equal highs. I wanted them to be traded too. So I called it out, right? Anyway, point is, I said I wanted to look for these highs and the target, and market came very close. This was a setup. Also took didn't last for very long. Well, actually, this consolidation did last a little longer than I wanted. But again, market on close macro, nice punch higher. This was enough for me to get my 9 handles. I think somewhere like, or is it 9? Yeah, literally I got like 9 handles after 4 o'clock, a little bit past 4. I closed inside this consolidation. I think my stop was like this. It was like a 2, maybe like this, something. So like a 2 hour trade, something to that effect. So this was just your standard again bounce of one range getting onto the lower portion of the PM range, and the NQ right consolidating right at the 50% of the PM range. Okay, what's next? So again, you don't need, like, let's say again, is this a failure that the market literally came all the way up here and barely, didn't get to this level when I wanted to exactly? Is this a failure? No, I closed the trade, 9 handles. That's a win in my books. You don't need the market always to go to all of your targets to make money. That's also maybe an important takeaway for somebody, and anyways, it's 4 o'clock. You don't want to hold trades overnight. You're going to close it anyway. So it starts consolidating. That's a win, a nice win. Not a lot of drawdown here. That was it. So let's see what else. Almost confidence. Yeah. Okay, next day. Here we go. Next day, I mentioned that right at 10 o'clock, time to look for potential. So the market was really dropping, starting from Asia, all the way from Asia was dropping, London was dropping. So right after like 10 o'clock, I said, start looking for potential counter trend retracement. And I shared my ES trade also. And the reason why I was also confident we're going to go on, besides the time element of, being 10 o'clock, market has been dropping the whole day straight from Asia. So usually 10 o'clock around, after 10 o'clock, the first 15 to 30 minutes in those conditions, you will see some kind of retracement, if not a full-blown reversal. But again, this retracement was enough for me to, like, I didn't even like wait for this. Like, this was like a quick, I think, 6 handle scalp. So 10 o'clock, you look at YM. YM actually did not go, do as much. I mean, it dropped also, but compared to, if you look at the price section, for its 5 a.m. range, 5 to 6 a.m. Both markets have been way beyond its range, right? Way beyond its range. Yeah, way beyond. But point is that here, 10 o'clock, I was looking at it and okay, I was looking at the ES again because NQ was far gone beyond. But again, you couldn't really go wrong with, I mean, it depends on your experience. I wanted to play it safe with the S because it did not go past, again, if it goes past beyond 4 extensions, I'm usually not interested in that asset class, but it doesn't mean I can't trade, let's say, I mean, not an asset class, in that asset and Q, I was not interested in it. I took ES because ES was basically, again, in this case, it was bouncing over the 2.5, but that doesn't, but that by itself means nothing to me. I don't look at 2.5 again. Just to repeat myself, I look at the first half, first 50%, 0.5, 1, 2, 3, and 4, right? Whole numbers. But this would, after, like I said, I'm looking for counter trends up. This was actually a nice confluence. The price kind of bounced off the two range expansions here. But again, I was looking, this gave me the, like when this consolidation of YM basically rejecting, breaking above the range and rejecting it gave me confidence to get into the trade on ES. It was somewhere here. I think it was like, yeah, I didn't even, it was like a 6 handle trade. I didn't wait for all this for like 10 handles. I got my 6 handles. I got out. It was like also like somewhere, I think on the 1 minute chart. I don't want to drop right now on the 1 minute chart, but again, everything is on my Telegram. I share the trades. It's all there. I don't want to repeat myself, second time, but my stop was, it was something like a 1 point. Yeah, it was a quick scalp, like 1.3, 1.5-ish scalp, something like that. It wasn't even a 2R, but that was enough. Again, so this you might look at it and like, well, this is a little bit, this is a little bit confusing, and that's fine. Again, this is what comes with experience. And I've been using these ranges for quite some time. I've developed my eye on certain setups, and this alone was enough for me. And price broke above, rejected the 50, rejected with the wicks, basically stopped with the bodies at the upper portion of it. And I took ES because again, it was also it was within the range expansions. So that was a trade. Also, kind of mentioned before the fact. And we had to run a very nice run on NQ, admittedly, like very nice from the time I mentioned, like literally this was a 100 handle move. But again, it was so far outside of the range that I took ES. That should be the takeaway from this trade, okay? So again, some setups will be easier to spot than others, but if you like this approach, if you like looking at relative strengths like this, it's just a matter of time until you develop those skills and see setups that you haven't seen before. And later in the day, actually, also I missed it right after 1 o'clock. Again, this was a nice short here. This was beautiful. Just YM stopped exactly at the 50% on the bodies and went lower. And then when I saw it like later, it was somewhere here. I said, okay, I'm looking for these lows here. And in Q, I wanted this low here. So as you can see in Q failed to reach this low, but YM did. And I had this somewhere short here, and they just took me out break even. So that was that. But this was a nice, very, very nice setup right after 3 o'clock. I mean, 1:01 p.m., like 1:05, I think that was, yeah, setup there on the 1 minute chart dropped here. Let's see. All right, Thursday, the AM session when there was a lot of chop. So a lot of people got stressed out from the AM session. They got, got themselves in stuck in that chop. And again, this was Thursday AM was confusing to, an inexperienced trader. It was all over the place. Like if you look at these ranges, just AM range at the same time. I did call I'm looking for at around like 10:30. I said I want ES to hit the 6:30, 8:36 a.m. high, which was this wick right here, right? So I saw this consolidation happening around 10 o'clock. And then around here, I said, okay, I want this, high to be taken. And I took a few scalps. Basically, I kind of, as I was in the trade here, I said, okay, good. We've taken out this high here. It's a good place to take a partial. And that's why I actually collapsed my trade after seeing, oh yeah, so this is another thing, like when to collapse your trade sometimes if it's not going to go to a full target you believe. So look, I said around here, I said I'm looking for loans. I want to see ES breach its 836 high, right? Um, and this was my confirmation that ES was bouncing on top of its range. And again, this is the example where it might be a little bit also, difficult to understand, because if you look at this, this was bouncing off the range and Q was above the range, YM was above the range. This kind of stuff comes from experience. There's no other way I can possibly explain to you unless you spend enough time and you feel those things and you have a good understanding of it, drawn liquidity. Okay, but this bounce was enough for me to say, okay, it looks like this literally just consolidated on top of the range. So I said I want this high. Above this high, took a partial, and then I was in 2 contracts long. I took a partial here, and then I closed the position somewhere here after I saw YM rejecting the 50% of its range here. See, at the same time, and literally after, like right after I closed, like 5-10 minutes later, it went down. This would have taken me out because I was entering somewhere here in this candle, I think. So also scalp here, and then I took another scalp where this dropped here. This was the day when the session when my precision was off. I did have some drawdown here, I think with this wick, and then basically I entered the position long here, and then it dropped, almost took my stop was here, so almost hit my stop kind of, and then I added another contract. There was a 1 minute, I think IFVG inside. Again, I don't want to drop in the 1 minute chart here. It's not the purpose of this video, but everything is, all the stuff is shared on the 1 minute or the 30-second charts shared on Telegram if you're interested, if you're not already in there. And in this case, I took another long, so it took, and I just scalped this for like a few, like 4, maybe 5 handles, something like that. You can see again, we failed to breach this high. Again, this so it never, in this specific time of day, it did not breach the highs. It's a failure. No, I took 2 scalps, even though they were not very precise, but they were ended up in green, so it's a win in my books. And again, I exited the first trade here completely because I saw YM rejecting the 50% of the range. So that's how you can kind of, if you look at the markets, if you understand the correlation, if you are in a trade, okay, maybe at the very least take a partial, if not close the position entirely. And that's what I did. Like I had my one less contract on, I closed the position because of this. Okay, and then here, this is when I said, yeah, I said literally right around here, I said 3:35 p.m. I said I would be nice to see a bullish PM session, and this thing just flew completely very quickly. And this was interesting. Why? Because we go back to our range expansions again, using the bodies. Look, 0.5, it was wicking the 0.5 on ES, beautiful reaction here, and in Q at the same time was also respecting its half range expansion with its bodies. Very nice here, respectful. So both indices were respecting at the same time 50%, right? While YM wasn't breaking its range. And you can look at it, if you zoom out a little bit, you can say that, wait a minute, this was like your regular kind of SMT between, the low of the AM session, something like this, right? And you'll be absolutely right. Yes, you can look at it as your regular SMT, but for the purpose of this model and just, SMT alone sometimes is not enough for me. Like I look, okay, so does this look like SMT? Sure. But like also what I look for is now we'll look for the PM session, how it reacts to the range. And in this case, again, a very nice reaction of the 50%. And a very subtle thing. You might think that you can go wrong if you like, if both indices, again, I'm not looking at YM. In this case, YM was clearly stronger because it failed to break its range. So it just flew. Absolutely, right? Like very quickly, you can see a very strong reaction. Yes, it was stronger, but I don't trade YM. So out of these two, which index would you choose? I chose ES. Why? Because very subtle. Again, look, NQ closed at 0.5 with its bodies, but ES at the same time just wicked this level, right? And the bodies closed above. So technically, this is like more about like 0.25, whatever. But again, this wicks, those wicks were enough for me. So to me, ES was stronger. Just such a subtle thing in price action, but it matters. If you really study the market, all this stuff matters. Again, so I took this trade. I called for bullish buys. I was in this trade, and somewhere here, I took this long. And this was like only targeted somewhere here like this, like almost the upper portion of this imbalance, but this didn't completely. Finally hit my 8 target that I was reaching for like twice. I wanted this target. 8:36 a.m. high, went for it in the PM session. So that's a business here. Hopefully it makes sense. And I wanted to look at one more example, I think. There were several things that I called out. Okay. Thursday, oh, Friday. Okay, this was the only time when. So on Friday, I did not actually, I was in this trade here. I saw this price action. I saw how both CS and NQ were basically, once they came back from below this range, they broke above, they were rejecting the low of the range. The low of the range was rejected, while YM at the same time was already breaking above the highest high of the range, and it was rejecting that. So I had the trade on ES here. I shared that too. And I was in this trade. But then also we got into this a little bit portion of kind of, retracement. And then at that time I said, okay, it looks like I wanted to see, I saw, okay, we might go lower somewhere here. I said, okay, I want like, this was like some 1 minute trend line liquidity here. And I wanted, this lows here, because also if you zoom out a little bit, there was a bunch of, this low, all these lows were in close proximity. So I kind of wanted to see the market drop maybe below this level and then go up, but it didn't happen. And that's where I was wrong. But no, I didn't take any trades because, as I mentioned on the Telegram, also, I don't take trades between 11:15 and 1 o'clock. So my original bias was wrong, but I quickly shifted gears when I saw, before even the full hour closed, for the lunch hour closed, right before it closed, maybe 10 minutes before it closed, I said, okay, looks like we're actually going to continue high and create a new high. I'm mentioning this on NQ, because I saw how YM at the time was rejecting with this wick its own range. And it wasn't even like the range was that at that time the high was here. So at that the 50% shifted. It was literally rejecting the 50% at the time. I think it was here. Yeah, it was around here before price created this candle. This was a range high, so the 50% was a little below, and this wick was literally at the 50%, rejecting it. And ES was doing pretty much the same thing with this wick here. You can see before, even just minutes before the range closed. Again, just subtle things you notice in price action that do take time and practice to develop. But once you do develop those skills, it's, again, I think it's like a cheat code when you compare relative strengths. So I said, okay, as long as NQ is going to say, did I say NQ? What was it? Let me see. Yeah, as long as NQ stays above 50% of its launch range, we should get a new high. And, we got a new high here. I entered right after 1 p.m. It was 1:03. I entered on this down close candle here because we had an imbalance here on the 5-minute. And if you look to the left, we had this wick. So wick is what? Up, down, and then up candle. So this becomes balanced price range. Balanced price range is a very strong algorithmic signature. And so I took this long and I got my 30, like I didn't hold for the full run. I got my 30 something handles. That was the last trade for the day. All right. So that's kind of, so where is it? Where was this example that I want to show you guys? Oh, it was actually here. So those are the things I'm looking for. Like when I was in this trade, I missed this kind of like I missed this, but look, this is what I was talking about. When ES went all the way down to 4 range expansions, right? It was clearly nice, it stopped very nicely with its bodies. Here once, came up, came back all the way down, -4, wicked it again. And at the same time, NQ, again, using the bodies, let's make it a little bit more accurate. Again, almost, well, yeah, there we go. So at the same time, again, NQ was rejecting the 2. And again, time and price, when did this happen? A little bit right after 10 o'clock, like 10:10, 10:15. So right when we're interested in taking trades, ES was rejecting 4 range expansions, while NQ was rejecting 2 range expansions. So those are the things I'm looking for. And clearly, obviously, out of these two, which index is stronger? The one that failed to go all the way, to the 4, right? Like the one that stopped at the level 2, basically. So, and we can see that actually is the fact, because NQ broke these highs by an hour later, while ES actually failed to break this high, and we had this retracement lower. So hopefully this makes sense. Again, all this, just like what I explained, this just confirms that the way we look at price gauging relative strengths, it's valid. The index that failed to go to a lower expansion is stronger, and we see that in fact that is the case. We've reached this highs while ES failed here. So those are the things that I look for in price, utilizing this model as confluence. Again, sometimes I just trade based on the Triad model, but sometimes I just use this as an extra confluence to what I look for in the 1-minute chart. And that's a completely different topic. And again, the purpose of this video is just to kind of explain to you how I use standard range expansions. I did talk about how to utilize, in the first video, I talked about how to enter, where to place your stops and all that kind of, so I didn't want to, go over it again. Again, with all the things that I shared on my Telegram, I hope that if you pay attention, it makes sense. If it doesn't, well, I tried my best, if it doesn't work for you, then it doesn't work for you. Can't please everybody. That's not even my goal that's impossible to please everybody. My goal is just to share something that I've discovered. I've been using it for a very long time. It works. On index futures, you can see how many setups throughout the week. There's plenty. Almost every day there's something to take. It's either a little scalp, either like a little retracement, or a complete, reversal. There's always something to usually take. So with that being said, I really hope that you found something useful. Again, I'm not a big fan, honestly. Like I'm not your typical. I'm really not a social media influencer. It's too much work making all those videos, all that content. It's much easier for me to just press a button and make money, or lose money, or whatever. It takes too much work. I'm not a fan of all this stuff. I tried, and I just rather trade. So I don't care about how many people follow me, how many people view my content, but I do care if the people who do actually watch my content, they, after watching, they, have come out with it with certain takeaways. They apply it, back test it, forward test it, and hopefully improve their trading. So that's the most important part to me. But how many people watch me, doesn't matter. Even if a few folks, again, get funded, that's great. That's, and means I've done my part. Anyways, hopefully you found this insightful. We'll see what the next week brings, and until next time, take care.